Okay, everybody, here we go. It's me, Gregory Mannarino. Tuesday, November 7th, 2023, and this is my pre-market report. There's something really interesting going on here right now, and the market was smelling this yesterday. If you recall, in my post-market video, I said that I believe there was some kind of a fear trade that was going on, and it might have to do with this resolution here. Basically a declaration of war on Iran here. The wording is very explicit here. The United States will use all means necessary to prevent Iran from acquiring nuclear weapons. Okay, that fear, I believe, is playing out this morning as well. How do we know that? The knee-jerk higher into the dollar. The debt market today is kind of where we left it off. I'm referring to the 10-year yield yesterday. So there's nothing really going on there. But the knee-jerk into the dollar, along with commodities right now that are getting hit pretty good. Gold's getting hit. Silver's getting hit pretty hard. Crude oil is getting hit pretty hard as well. And stock futures are lower. This is a fear trade. And you know, the first thing that popped into my head was this. This is quite a piece of I don't know, whatever the hell you want to call this thing here, this House resolution. And the more I think about it, and this was really weighing on me last night, an overwhelming passage of this resolution, 354 to 53, what really amounts to a declaration of war. It is unacceptable. The United States will not accept a nuclear Iran and will use all means necessary to do something about it. The market doesn't like it. I'm telling you right now. The market does want war. There is no doubt about it. I mean, clearly this would push cash into the debt market, but this sounds to me like maybe a little more than the market wants to swallow at this point. We are going to see war expand. All right, let's just lay it out here on the table. There is no doubt at all whatsoever that war is going to expand. It's the number one mechanism, bar none, that will pull cash into the now, which will allow central banks, in this case the Federal Reserve, to continue to inflate. But I think it's the wording of this resolution that kind of maybe rattling the markets here a little bit. And I'm not talking about the stock market. Let's look. The stock market, we just had literally the best week of the year last week. We pulled off a gain yesterday. This market needs to, I don't know, maybe there should be some profit taking here. Stock futures are slightly lower, but it's the action in the dollar this morning. It's commodities that are sending us a signal here. And I think, again, look, this is a gift, a freaking gift to you and I. And I covered this recently. I told you how this would work out. We discussed right here on this blog how the game remains risk on, meaning the Fed is going to keep rates low. Hold that thought. We have more to talk about with regard to that because rate cuts are coming. I was pondering this last night as well, and I want to talk more about that. The Federal Reserve artificially suppressing rates keeps that window open for cash to make its way into the stock market. And we outlined right here, this would put pressure on gold, silver, commodities, at least in the short run here, as the game remains risk on. Cash going into the stock market. That's what the Fed wants to do. Maintain the illusion of the stock market. Now let's talk a little more here. We already know that the Federal Reserve has the consumer by the throat. The real reason why the Fed has been raising rates has nothing to do with stopping inflation. Zero. It's about cutting off the availability of credit to small businesses, which are disappearing at their fastest pace ever. Faster than the financial crisis, faster than the scamdemic. This is deliberate. This is what the Fed is trying to do, fulfill the corporate agenda. I already told you also as part of the corporate agenda how this works. Year-end stock price is how the CEOs and the upper management of the corporations get their big, fat, ugly bonuses. The Fed, in my view, is going to prop up this market to make sure that the CEOs of the corporations and the big fat cats get their expected multi-million-dollar year-end bonuses here. So that's why I still stick to my guns here that the market is going to get propped up to the end of the year. Then after the first of the year, we'll see where this all goes here. It might drop. But again, we're in a selection cycle, a presidential selection cycle. The illusion of the market is a very, very powerful thing. Now, let's talk about rate cuts in the Federal Reserve. Why I believe the Federal Reserve is likely to cut rates moving into next year or be the early part of next year. So what do we know is going on? All right, we know that the major commercial banks have loaded up on debt, treasuries, okay, which are yielding nothing, and this has caused their portfolio's value to plummet. Okay, so if you consider that, now if you look at where bond yields are now, let's say these same institutions that were buying low-yielding debt are buying debt that is yielding what it's yielding now, and then the Federal Reserve cuts rates, that would boost the value of their portfolios. You see the game here? It's a game. So the Federal Reserve has probably already allowed the commercial banks to know that sooner than later, more than likely sometime next year, the Fed is going to start cutting rates. Again, it's not going to help the consumer. Forget about it. They're done already. And the corporate agenda will be fulfilled. But it's kind of it's a twisted scheme if you think about how dastardly this is. This is dastardly. That the Federal Reserve will allow the commercial banks to load up on debt right now. Because the Federal Reserve, look, we know they are the end game buyer, the buyer of last resort, the lender and buyer of last resort here. But they got to protect the commercial banks, at least the biggest ones. You understand? And they are consolidating the system. There's no doubt about it. But think about it. Think about what I'm saying here. These institutions loading up on debt that's yielding nothing. As yields are rising, their portfolios are losing value. Now, what would happen if these same institutions loaded up on debt at its current level, value, yield, okay, and all of a sudden started cutting rates? Well, that would help their portfolios. This is what I expect to happen. It should make sense to you. We'll see how it plays out. Really, honestly, I will return to this video, let's say sometime next year, to see if this call was correct. But it just seems logical that that's what they're going to do here. So anyway, what can we expect, people? War. More war. And as I said yesterday, this resolution here, this is a death warrant. And the wording here is a declaration of war on Iran by the United States. It's unbelievable. The resolution calls for us to use all means necessary to prevent Iran from acquiring nuclear weapons. And I think this is rattling the markets right now. Let the markets swallow it. Let the market just digest this. It may take a day or two or three or whatever, but I still stick to my guns on this. I think we're going to see a year-end rally in this market. Okay, that means that the price action of gold and silver and commodities is probably going to become suppressed as cash makes its way into the stock market seeking yield. You understand? You see how the game works? It's not hard to understand if you realize how cash flows through the markets and how it's being set up here by the Federal Reserve. And I really feel that this is a backdoor mechanism of bailing out the banks, honestly, because their portfolios, the commercial banks' portfolios have gotten hurt. This has been the most vicious bear market in debt that we've ever seen. And undoubtedly, because of the banks, no deposits, no loans, and no deals, these commercial banks, they got a big problem. And I've outlined this for all of you, I think very accurately, before it happened and during, while this is going on here. But this is a way, by the Fed cutting rates, they could really help the commercial banks recover from this. And I really believe that's what's going to happen, only because it makes sense. You understand? I think most of you do. All right, people, look, I'm going to end this video. I hope you got something out of it. I want to hear from you. What do you think about, let's see what I believe the Federal Reserve is going to do, cut rates, allow these major institutions to load up on debt with a higher yield right now, then start to cut rates, which will, of course, make their portfolios smell like a rose. You understand? It's a game. This is a game, and we are so far ahead of these freaks. It's not even funny. With regard to commodities, people, this is a buying opportunity in my view. We know we need to have exposure here. Eventually, this whole thing, at a time of their choosing, you have to understand, Federal Reserve, central banks are going to continue to prop this up. They're going to buy more debt. They're going to buy stocks. They're going to buy large cap stocks, as they always do, to prop up the market. When they're ready, it would take nothing. We are in a full-blown liquidity crisis. Okay, the Federal Reserve is pumping the market right now, hoping war is going to expand. This may be a little over the top here. This resolution here, this basically war on Iran from the United States. And I think that's rattling the markets a little bit. I really do. But I don't think it's going to last either. I don't think it's going to last. But we'll see. Maybe I'm wrong. All right? This guy loves you a lot. Please share the video. Please comment. I want to hear from you. I will read the comments. I promise you that. Those thumbs up. Please give this video a thumbs up. It gets the videos shown. And then people need to hear this stuff because I don't know where the heck they're going to get this information from any place else. All right? Love you a lot. See you later. 4:05 p.m. Eastern Daylight Time for the live stream. Have some questions for me. And for those of you that complain that I'm not answering your questions, I'll see you later at the live stream, okay? So have your questions ready for me. I'll see you later.